Bank of England has killed off UK buy-to-let and property market, or have they? So the Bank of England have just raised interest rates again for the 6th consecutive time, and this time by half a percentage point, so by 0.5%. This is the largest rise for 27 years. What does this mean for the property market? Will this kill it, or will the property market keep on defying gravity and going like gangbusters one way upwards? So in this video we're going to discuss this. Make sure you stay around to the end, because I'm going to give you some ideas around what I think can happen and some suggestions of what you can do as a property investor in this current climate with a looming recession, uncertain times. There is still a way forward, so make sure you stay to the end, and make sure you stay to the end as well, because there'll be a £400 gift from the government. So if you want a £400 gift from the government, stay to the end, and if you want that gift, you got to make sure you hit that like button beforehand. But all jokes aside, let's get into this interest rate rise. Bank of England crashing the UK market or not crashing the UK property market? So interest rates have risen again, and why are they keep on rising interest rates? So in short, I've done a video around here or around here, I'm not sure what side that'll be on, but watch this video on the last Bank of England rate rise, and we talk about inflation on that video. So I'm not going to go too much in depth now, but the government have been printing money. All governments have been printing tons of money. When you put a lot of liquidity into the market, it causes inflation. One of the biggest factors and tools in their toolbox to fight inflation is raising interest rates. So at the moment they're raising interest rates, but it's a very dangerous time to raise interest rates with such a big debt bubble in the UK. But another major contributor towards this inflation is not just the money printing. Of course that's contributing towards it, but it's also the energy cost, the cost of living crisis that we're experiencing at the moment is having a ginormous impact on the market. The government are blaming these energy rises down to the conflict in Ukraine and against Russia, but these rises were starting to come in before that, and the energy cap was lifted and announced to be lifted before all these issues, and it got lifted in April this year. So if you read this article from Sky, it says, what is the energy cap and why are bills rising so sharply? So in this article, energy bills continue to rise for millions of people across the country. And it says in April, energy price cap was lifted by 54% to 1,971. And in October, it's expected to rise again much further. So this energy cap is largely driven from gas suppliers and oil suppliers. And when you look at this article, look, I'm not against anybody making money. I think big businesses deserve to make big profits because they take on big pressures. And when people criticize the Amazons and the Apples for paying less tax, it really pains me, because I'm like, they're not paying less tax, they're paying higher tax bills but less percentage. But they deserve to pay a less percentage, in my opinion, purely because they're taking on a big risk and pressure. So there should be some rewards for that big risk and pressure that it takes on. And loads of ginormous businesses are only one recall or one bad market review away from collapsing. You see big businesses go out of business overnight, so the pressure on them owners and the founders of them is ginormous, and they deserve the reward. But in this circumstances, BP are recording record levels of profits, and I really can't understand this. I've searched the internet to see why the government are allowing this. When the government are already imposing, if you raise soon on the new white paper on the tenant reform stuff, if a landlord raises the rents too high, the tenant can complain against this and potentially cap that from going too high. They're talking about rent caps in certain areas. So the government can step into the private rented sector and force landlords to cap this sort of stuff. Why can't they force these big companies to cap it when having record profits? I'd understand if the companies was struggling and these big oil companies wasn't turning a profit, but having the second highest profit on record, I feel the government can be doing something about this, because this is really fundamental behind a lot of the inflation. Of course, the money printing's had a contribution towards it, but you think if oil price is more expensive, if gas prices and energy prices are more expensive, this affects how you make stuff in the factories. All the cost of running your factory with electric and gas goes up. Delivering the goods goes up because the petrols are higher. So this could have a massive impact in reducing inflation, not just raising interest rates. It's kind of counterproductive for me. One of the reasons we're doing this is to curb inflation. One of the reasons they want to curb inflation is because of the cost of living crisis. And they're adding to this cost of living crisis by adding interest rates higher. So it's a bit backward by the government for me. But look, if you look at this article by iNews, it says, why are energy companies making so much money? What is driving the record profits and the prices? And they're largely putting into it. Look, BP recorded a mammoth profit of 6.9 billion, and it was their second highest one in their history. But the energy companies are trying to defend themselves as saying it does not come from the energy prices going up. And they're trying to defend that, saying we're reinvesting back into green technologies. I feel, as I said, I don't like bashing big companies. The pressure it takes to run a small company and a small team is ginormous. So if you're running a massive global company, you do deserve profits and rewards for that. But at the cost of people's living, I feel the government could step in and can step in to do something about it. And I think they should. Put in the comments if you also agree with this. But what does this mean for the property market, as in property investors and homeowners in general? Because what happens to the property market, like linked to homeowners, links and affects us as property investors also. So this article in the Times says the average 2-year fixed mortgage is up 0.92%. And of November, Landries and Hargreave and Lansdowne is now saying just over 3%. It's going to go just over 3% for the first time in 7 years. Meanwhile, Zoopla, the data from Zoopla is suggesting that 5% of properties had their prices cut in May by an average 9%. So they're saying the prices of that are going down now, starting to cut, according to Zoopla. But none of this is screaming out crash. They're just still saying the property market still seems pretty strong. We'll come a bit back to that in a minute. But they're saying the property market stays strong. It looks like it's still going to stay strong. But if you look at this article in The Guardian, it's saying the end of soaring house prices as central banks raise rates. So wherever you read, you'll get a mixed review on this. But have a look at this article in the Times as well. So in the Times, they're saying, this is Money article. They're saying mortgage rate hikes half the profits of average UK buy-to-let landlords, and the base rate rise to 2.5%. This could see them turn into negative earnings. It goes on to say as well, landlords have seen annual profits nearly half in the past 8 months, and the biggest lenders have risen from 1.25% to 3.12% since October. On average, a 200k property has jumped from a £209 mortgage to a £521 mortgage. I talk about this a lot, about getting the right style investments. Do you want to be an average investor? Do you want average investments? I'm going to share with you at the end what sort of investments will still work in this market. But it's all around getting these right style properties, and time in the market will beat time in the market. If you get your rates rising that rapidly and you've not got enough coverage and enough yield and profit in them, as this article is suggesting, some people are going to go into negative, or their profits are going to be massively reduced. But the big question is, what's going to happen? Are the interest rates going to continue to rise? So as of this article by the Times, they're saying economists are predicting that the base rate could hit 3%. And some are saying maybe even higher. We've got another, the next base rate interest rise decision is going to be in September the 15th. And they're predicting it's going to go up again. Is it going to jump again another 0.5%? Or is it going to be 0.25% like the previous ones? None of us know for certain. So what we need to be doing going forward is making sure we've got a solid portfolio that can ride up and down storms in the market. So what you want to be doing is not being an average investor and buying average price properties for low returns. High yielding, low purchase, single let properties are the foundation that will ride you out of these storms. Look, the average property prices that I'm buying at the moment, around 70-ish sort of K, 80-ish K. One of the properties I've just bought is a 70k property, a 77k property will rent for £700 a month. So the mortgage is around £200 a month. It was at 3.5%. So if this doubles, I've still got a lot. It can double and double again, and I've still got coverage in paying the mortgage back. And if it does double and double again, I feel the banks will step in, the central government will step in to pull that down, because it will just hurt too many homes. A lot of people can't handle this shock, and it'll put the market into a massive economic problems. Again, another property I've just bought, I've bought for 73k, and we've got it on a fixed term with social housing providers. So no matter what happens, I've got on a 5-year fixed rate. So what you want to do is fix your rates for a long time. I've got it on a 5-year fixed rate with a 5-year guaranteed income coming from social housing provider, which is backed by the government. So I know I've got my income guaranteed, and that goes up with inflation year by year in my contract. So each year that will slowly increase. Look, watch this video here if you want to see how build out call this an all-weather portfolio, and you want multiple streams of property income from your property portfolio, but you want this foundational base level, and low purchase, high yielding single net properties is the foundation. Then you mix it in with some of the higher cash flowing stuff and some of the riskier stuff. As I said, watch this video, and I'll show you around some of the deals that I'm actually doing and just done recently in the different styles of property. I've got some of the stuff that is much more high risk, but the reason I take that on is because I've got a good foundation that will support the higher risk stuff if things go wrong. So building that all-weather portfolio is absolutely critical. If you want support around building an all-weather portfolio, I help people with free discovery calls, or if you want to come and join me on an on-patch training day, we will take you around to these all-weather portfolios and I'll show you the different style properties you can buy. Please let us know in the comments. I've got an on-patch training day on the 27th, and there'll be another one just after then. So even if you're watching this video afterwards, let me know in the comments and we'll get you the link out to register for the up-and-coming one, or to come register for the future ones in the future. We run these multiple times, about 6 times a year. We run these on-patch training days where we'll teach you how to build all-weather portfolio. So put it in the comment below if you're interested in that. If you're interested to help, I love helping people as well. I put aside a certain amount of hours each week to give people just free calls. So if you want a free call, also put in the comments free call, and I'll just give you a free coaching call. No sales, no nothing, just help you in a journey. I like to make it transparent that there is no sales, because look, I was going to go and volunteer for Richard Branson's Virgin Unite, and I realised, look, I've got a decent little following, so why don't I just volunteer to help my following? But if people thought these were going to be sales calls in disguise, then nobody would jump on the call. So rest assured, if you want help in your journey, whether it's mindset, whether it's financial education, business, property, jump on a call with us. We'll help you go to your next, figure out, discover where you are in your journey, and help you discover the next steps to move forward in your journey. And absolutely zero sales, you can rest assured. As I said, I just talked about a paid coaching program. I've got coaching programs, but I won't send them on these calls. And as promised, the ones that stayed around, there's a £400 gift from the government. That gift is an energy grant from the government. So if you look in the description below, there'll be a link that takes you through. Some people will qualify for 400, some people qualify for a 650 grant, as far as I understand. So make sure you follow that link to get your government granted gift. But listen, my why is to live on my own terms, and my mission is to help as many people live on their own terms as possible. So please, if you've not done it already, hit that subscribe button, hit the bell icon so you get notified for this. Please share this or tag somebody in you think will get value from this. And please hit that thumbs up if you didn't do that at the start. But remember, if you don't evolve your ideas, you never live on your own terms. So evolve your ideas, live on your own terms. Have an amazing day.